Right, today we're joined by Jazz from Shawbrook Bank. I'll let him introduce himself.
Hello everyone, Jazz from Shawbrook Bank, Strategic Relationship Manager here at the bank. Been with the bank since inception, so a very long time. Good to be here.
It's not the first time you sat in the seat, so almost a year ago.
Exactly that, yeah.
So what's changed this year? What's the big thing that you've noticed?
Well, it's certainly been an interesting market, hasn't it? Ever evolving and forever sort of challenging. But for us, we've kind of been on our own journey this year as well. Obviously with the IPO, and the focus really for us has been kind of trying to maintain those profit margins, but yet still be really keen on originations.
How do you think on that point the IPO will be expected? What will clients expect from it? Or what should they expect from it?
I think the certainty is that when you IPO, there's an expectation that you've got new shareholders. So from their perspective, they're going to want to continue to see growth from the bank. So for us, we've got some really kind of hefty ambitions with regards to our originations next year, and we want to kind of exceed what we've done this year. So we've met our targets with regards to where we wanted to be, but the challenge is really for us to kind of push on now, and that'll be the plan. So I think from an investor's perspective, they should keep their eyes peeled for some good products and some pragmatic decisions.
Within the last year, specifically, you've had a couple of alterations. You've relaunched trading business.
Yep.
You've streamlined, which we'll touch on now, the product transfers.
Yep.
Which is a lot simpler process for the clients.
Yeah, definitely. I think the key thing for us was that we've built such a big backbook of business now, and you know we got to a stage where we didn't really have the slickness of trying to retain those clients. And a lot of the clients we have on the books are happy with the bank, but the process was kind of drawn out. So we've tried to really use automation and kind of make ourselves that.
Well, you've streamlined it as well, haven't you?
Yeah, 100%.
Like no underwriting, no legal, no valuation.
No valuations, yeah.
Even on the commercial stuff,
Absolutely.
No valuations.
Yeah, exactly that.
As long as you're not trying to do a capital raise.
Yeah, exactly. If it's literally pound for pound, then it shouldn't really touch the sides, is the plan.
And the trading business has launched and gone out there?
Really going well. Obviously, it's something that's kind of natural to the bank because when we first launched, that was all we kind of done. And then through the COVID years, you kind of realised that accounts maybe were not as strong as they were, so we needed to wait for that sort of period to evolve.
Yep.
And now that people's businesses, they're able to demonstrate how well they're doing, we just felt like it was a
bit of a support in the high street.
Massive, yeah, absolutely.
Yeah, you know, as long as they do what they're good at, you'll give them the support. Your day one loan's quite low.
Yeah.
For the minimum loan.
For the minimum loans starts at 150.
Yeah, which is pretty good. On interest only if they want it.
12 years, yeah.
So you know that's a support in the market. So that's last year.
Yeah.
So what's going to happen next year?
You tell me. Obviously interesting times with the budget, etc. So I think it's watched this space. But as I said, the plan for us is to continue to grow. As a sales team, we've already been positioned with some pretty hefty origination targets, as I mentioned. So the plan is to come out and be as pragmatic and as investor-led as we can be. So it's kind of like looking at the market and seeing how it evolves and then trying to create products that can continue to support the clientele. So buy-to-let, commercial is a massive thing for us, as you know.
Yep.
Bridging will still be there. It'll still be a product that we're still pushing.
Everything, really. Any emphasis on streamlining the short-term to term product?
Yes, yeah, I know.
And I'm not leading you down that path. I'm asking.
I know we've had a conversation about this before, but yeah, no. The plan is that the ideal scenario is a bridge to term product. As you know, we do both at the moment, but the journey can be disjointed sometimes. Although it's one process, so to speak. It's not one loan. Whereas we want to kind of have it. So
you've got it in as much as the legal side's smooth. Yeah. Because you don't need representation and stuff like that. So it's just getting that transition over, and then I think it'll be, particularly on the HMO and the commercial side, it will be a unique product.
I think that if there's any consolation, we've got underwriters, as you well know, who are training at the moment on the term side of the business, and they're the bridging guys. So we're already putting the wheels in motion to have that product ready to launch, and in the interim, we're doing the background to get the underwriters to be in a position where they can just work it from start to finish.
So any other new products coming?
I'm sure that there'll be continued sort of tweaks to commercial.
Yeah.
We see commercial as a really big avenue for us. As you know, investors are kind of changing their business models at times as well and looking at perhaps commercial property. So We've recently changed the fact that we now consider first-time commercial landlords, which is a good change. We've reduced our pricing in that area because we see that as an area that we want to support. Reduced our debt service cover ratios in that area, and literally tweaked criteria to make it a bit easier and slicker to use. So I think that we'll continue to support the commercial and the semi-commercial market. Buy-to-let, I think the use of automation, so automated values, I think is going to be massive for us next year.
We touched on this on other stuff. You know, the only sort of buy-to-let query I would have is if someone comes to me and it's not in limited company name now.
Yeah.
You know, that's one of the things.
Yeah.
You know, what the being out of the personal name, I just can't see how it can fit, how it's going to fit.
It's so hard now, isn't it? Especially, but nowadays, I think it gets to a stage where they're so few and far between. It does tend to seem to be the less seasoned or the non-portfolio kind of investors who haven't built up a great deal of property, and they're the ones who are still doing that. But
I also know that I'm not just here selling Shawbrook, but there is an increase across the board, although some lenders haven't picked up on it or how to deal with it on the incorporation ones.
Yeah.
And you know, we're seeing an increase in those from, I would say, even 12 to 18 months ago. You rarely come across them.
Yeah.
Now, I would say it's a weekly occurrence.
Incorporation, share purchases, that's the sort of stuff, the quirkier stuff that isn't really happening a lot. It seems to be the kind of the focus for people to.
And with the budget, with how it's predicted to go to the personal ones, I think a lot more will try and incorporate. Yeah, otherwise they'll get out.
Yeah, otherwise there's no point in them being. Yeah, exactly that. Yeah, you do see that kind of personal space or the personal ownership space just kind of disappearing.
Just so everyone should be aware, if they are thinking about it, there is still a criteria that they have to meet, not just with the lender. You can incorporate at any time if you want.
It's the legal situation.
But if there's a stamp duty issue, it has to be backed by the HMRC. So you need to engage with an accountant before you even consider it if you're going down that route. Any other trends that you've seen?
Trends that we've seen. Commercial to resi conversions, still kind of going really well. That seems to be something that everyone's looking at.
Yeah. The change in planning helped that as well.
Absolutely. Yeah, that's something that's come to the fore. Again, kind of bridging, using property, buying a bridge, using a bridge to buy a property, I should say. Yeah. And then kind of using that to convert it into a HMO.
Any thoughts, or is there any appetite to sort of fund in the works going further down the line?
Yeah, I mean, look, as you know, we already go to 85% on day one on the bridge anyway. So there's that, and then I think we are also looking at a drawdown facility as well, which I think it'll be good. It'll be a welcome addition to the product suite.
I think it'll fill the gap between your bridging and your development team.
Exactly. Yeah, so there is work in the pipeline for that as well.
So all in all,
it's looking
things
promising.
To look forward to.
Absolutely, yeah. I think the weird thing about the market is it always finds a way, doesn't it?
Yeah.
You know, you only got to look at the last 5 years and go, how have we come through this? But for whatever reason or another, we always kind of get there. So there'll always be opportunity, and we'll always try our best to continue to support investors over these sort of challenging periods.
Brilliant. Another trend is social housing. Yeah. How do you approach it, and what do you look out for that could be pitfalls?
Social housing is coming up more and more. People are sort of using them. The good thing for us is we do support it because from an income perspective, it's almost guaranteed, right? You know, you've got a strong sort of tenant and you kind of want to go for it. I think the key thing for us is to look at the usage to make sure that there's probably no real sort of care element.
I think from my experience, the most important sort of advice I would say is before you sign a lease, get whichever lender you're going with or your existing lender to agree it before it's signed, because you can get alterations. They might not like this clause, they might not like that clause. Yeah. But if you sign it and the lender don't agree it, you've got a problem.
We always kind of encourage our partners to do that anyway, really. We'd say, look, let's have a look at the lease first, see if we can get comfortable with it. Ultimately, you are looking at kind of tenant profile, vulnerability to a degree. If there's any level of overnight care, that can be a sticking point for us. But otherwise, social housing.
And certain care providers as well. You got, every lender's got their own quirks of what they do and don't accept. So as I say, my advice would be always get it checked.
Absolutely.
Obviously, if you've got a tenant, a lease in place and you're remortgaging, they'll tell you there and then whether they'll take it or not.
Yeah.
But if you're about to sign a new lease, you need, like, say you've been having a HMO with individual tenants and you're going to a full lease, get it checked first before you sign it.
Our legal partners are well averse to those leases now. We're seeing it more and more, so they're getting more and more familiar with them. So it's not a vigorous initial check. But
do you think that it has an effect on the valuation?
The issue is that it could provide an uplift potentially. It could provide an uplift, but I guess
can it not also provide a down?
There is that,
because it can only go out to a market that's going to buy it with that tenant in place.
Exactly. Yeah. I mean that's why to a degree we probably don't really lend in accordance to any sort of valuation accrued by the lease to a degree. We're still going to kind of just work on the property as
because in certain circumstances the rent can be lower. Than the market rent. It's just that the landlord decides to take a guaranteed rent, not to worry about it. It'll be given back in the condition it was given out in.
That's the thing. Yeah.
And for that, so if you get a lower passing rent, you could end up with a lower loan advance.
That's the thing. We're always going to work off the lower of the two, right?
Yeah.
So you kind of have that catch-22. But I mean, again, it's kind of down to what the valuation comes back with as well, and the guidance that they give from a demand perspective and a resaleability.
Yeah, brilliant. Okay, cool. Okay, that ends today's episode. So please watch out on all social media outlets for future episodes coming up.